Hi everyone. Welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence.
In today's video, let's take a look at a recent purchase by Pershing Square Holdings, an investment fund managed by the well-known investor Bill Ackman. Over the last 2 quarters, Q1 and Q2 2023, Ackman has purchased over $1.4 billion of Alphabet stock. This investment has already made more than $350 million so far for the fund. Ackman invested in the company at an average price between $94 and $95 per share. But what drove them to make this decision of purchasing a company valued at over $1.5 trillion already? Alphabet makes up more than 13% allocation in Pershing Square's portfolio. Join me as we delve into the top 3 reasons Pershing Square Holdings bought Alphabet or Google stock. Reason 1. An unmatched business model. The primary reason Pershing Square invested in Google stock is due to the belief in Alphabet's unmatched business model. Pershing Square recognized Alphabet as one of the world's greatest businesses, benefiting from deep barriers to entry and massive network effects in its core search business. Despite concerns about competitive positioning in artificial intelligence, AI, Pershing Square saw the high-quality nature of Google's business. Google's search engine and advertising platform have created a cash-generating machine. Google has 85% plus market share in search and, along with YouTube, approximately 50% share of the digital advertising market. With higher and improving returns on investment, expect digital ads to continue to take market share from traditional ad formats like TV and print, and increasingly drive the total advertising market growth above its historical trend. For example, in retail, rising e-commerce penetration is catalyzing the migration of offline promotion and trade spend dollars into digital ads. With search and YouTube as 2 of the highest return and most resilient ad formats, Google is well positioned to benefit from the structural growth in digital ad share across many categories. The company benefits from advertising revenue driven by billions of daily searches. This solid business model provides a steady stream of income and positions Alphabet for long-term success. Reason 2. Attractive valuation and misplaced AI concerns. Pershing Square saw Alphabet as attractively valued at the time of their investment. In the ever-evolving tech landscape, finding established giants at reasonable valuations can be a rare opportunity. Last year, November 2022, we had this opportunity with Meta, when it reached very low valuation due to investors' concerns on massive investments in metaverse. Meta has tripled in valuation since that period. Google's strong fundamentals and growth potential made it a compelling investment candidate for Pershing Square. According to Ackman, after having closely followed the company for many years, they had the opportunity to acquire a stake in Google at a highly attractive valuation. This is because the misplaced concerns over its competitive positioning in AI due to the launch of ChatGPT and other OpenAI services overshadowed the high-quality nature of its business and its strong growth prospects. Ackman had the opportunity to initiate their position in the company at a valuation of only 16 times forward earnings, a meaningful discount to the company's mid-20s historical average multiple. This was because the concerns around AI's perceived negative impact on Google's search business weighed on the share price. They believe these concerns underestimate Google's structural leadership position in AI for several key reasons. First, the company's vast scale and the ingrained consumer habit of Googling give the company the largest distribution channel to roll out AI into search and their suite of other apps. Google has 15 different products that serve more than 500 million users, and 6 products that serve over 2 billion users. Second, The company's substantial distribution moat is enhanced by having access to the highest quality training data given its immense historical index of consumer behavior and queries. Third, Google has made significant investments in AI for nearly a decade. From its acquisition of DeepMind in 2014 to developing proprietary TPU chips designed specifically for AI applications, the company has consistently prioritized AI and machine learning much earlier than peers and the current wave of emerging startups. Reason 3. Margin expansion opportunity. Pershing Square saw significant potential for margin expansion in Google's businesses. Despite core Google services revenue, excluding cloud and other bets, nearly doubling from 2018 to 2022, profit margins have risen only approximately 10% over this period. The company is committed to improving its cost discipline and recently reduced its workforce by 6%. Given the fundamentally fixed cost nature and high incremental margins of the core search business, we believe that Google can deliver operating leverage while continuing to invest in AI capabilities. Google's cloud business is a top 3 player in an oligopolistic market in the early stages of a multi-year shift of IT workloads from on-premise to cloud and hybrid cloud solutions. These powerful secular tailwinds have enabled Google to grow overall revenues over the last 5 years, which should continue to support near double-digit top-line growth in the coming years. Additionally, Google's cloud segment reached break-even profitability for the second straight quarter in the Q2 of this year, and cloud margins should continue to improve given peers like AWS enjoy nearly 30% operating margins. In addition to its superb operating and growth characteristics, Google has an extremely strong balance sheet and an attractive capital return program. Cash net of debt comprises 6% of Google's market cap, and the company is currently buying back approximately 4% of its shares each year. The conclusion. Pershing Square believe that Google's structural leadership position in AI, strong business model, growth potential, and attractive valuation made it an appealing investment opportunity with the potential for continued growth and multiple expansion over time.
For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more videos on memos and write-ups from top investors. Thanks for watching.